Gonzo bankers, Smarter Bank Journey to 2030. Let's talk about the pillars. The pillar we want to talk about now is hyper efficiency. The environment, the ecosystem has changed dramatically. Bank of America is at 61% digital account opening. That is a very different world than we've lived in the past. Technology companies have changed the expectations of what efficiency looks like, from retail stores to banking to consumer experience. We have to deliver a much more seamless and integrated and efficient customer experience. So how do we get that hyper efficiency? I've asked Brad Smith to join us to talk with his team about some of the efficiency opportunities that we have as bankers to win and be successful in this ever-changing world of hyper efficiency. So Brad?
Thanks, Tony. Appreciate it. And that stat from B of A is really eye-opening for our market. And digital is absolutely an enabling tool for improved efficiency. So is AI, so is workflow, so is middleware. So yes, we need to be looking at technology investments to improve efficiency. But as we all know, just buying technology doesn't necessarily improve efficiency. There's strategy questions, business model questions, culture questions, process questions. So I brought Ryan Brogan and Chris Miller in to share some thoughts of what they see in the marketplace across our clients, because I don't think there's any question that all of our clients can and should be working to become more efficient. Also, it's important to note that doesn't mean abandoning service. It's not an either or anymore. This isn't the 70s or 80s. I also think efficiency ratio is a number that exec teams need to be talking about. We use efficient and efficiency ratio interchangeably, even though they're a little bit different. I do think it's a performance metric that needs to be managed and monitored. So we'll talk a little bit about those components, because really all three of them, net interest margin, non-interest income, non-interest expense, are all under pressure, right? Loan yields, loan pricing, still very competitive. Deposit growth, one of the biggest challenges in the industry. Don't see that changing anytime real soon. Non-interest income coming down across the industry, really difficult to move the needle on that. And of course, non-interest expense, we continue to invest in technology. Our comp expense continues to grow. No one wants to close branches, even if they're underperforming. So how do we manage all that at a time that we need to become more efficient? So I'll ask Ryan first, maybe, working with banks and credit unions of all sizes, all business models, what are you seeing out there? What are people trying, and what can our clients and our market do to try to become more efficient?
Yeah, well, I think it's instructive, Brad, to think about some of the specific traits of hyper efficient banks and credit unions, and the first one that comes to mind for me is hyper efficient institutions are hyper focused, right? So focused in how they articulate their strategic vision, and how they define their target business model that ultimately enables differentiation. One of the ways that I see that manifest with really successful hyper efficient organizations is they say no a lot, right? So for every one of the strategic initiatives that gets the green light, there are 10 other cool or compelling ideas that they're saying no or not right now to. The other trait that I would really emphasize, and to your point, right, efficiency ratio, a very key measure. Hyper efficient organizations tend to really attack efficiency ratio from all angles. So certainly in the short run, a bank or credit union can achieve an impressively low efficiency ratio by focusing only on expense reduction. But the reality is that's not a sustainable approach, because inevitably it means you're not investing in and evolving the business long term. So yes, expenses are important, and on that side of things, we see hyper efficient top performers, do a few things. So they have a fine-tuned approach to contract negotiation, and really vendor performance management, beyond when the contract is inked or renewed. They tend to ingrain really at sort of a cultural level, this concept of ongoing process improvement and importantly, process ownership. And they also leverage data really effectively to inform decisions about resourcing, right? So those questions of when and where, do we add to staff, or how do we optimize the physical branch footprint, are not based on sort of gut instinct in hyper efficient organizations. On the revenue side of things, I think it's really important to focus in on where hyper efficient organizations really separate themselves. So a few things come to mind. They zero in on segments, market niches where they can truly differentiate, right? So it's not a sort of just a race to the bottom on price. It's not a generic. We differentiate on service and how great our people are. Certainly, those are important elements, but they get much more specific about the focus. They also excel at growing and diversifying non-interest income sources, right? So as you mentioned, pressure, industry wide. So the more diversified, sustainable the non-interest income streams are, the better position they are. And lastly, they really make calculated bets on new business lines and product offerings. I mean, I've heard strategy described as basically making a series of bets on, what's going to happen with the external environment, with our competitors, with our clients, and I think that's really true. And I would just mention there's this quote, basically that excellence is mundane, and the original context of that quote was about elite Olympic athletes, but the concept being, there's no single hack, right? There's not a silver bullet in terms of hyper efficiency. It's a collection of things, many of those things I just mentioned, and it's doing them well, doing them consistently over time that really leads to hyper efficiency.
Yeah, it's execution is where a lot of efficiency strategies really fall apart. Chris is head of our digital practice. I know that B of A stat on digital sales is something that you talk a lot about, and really a rallying cry for clients. But beyond just digital sales, just your thoughts on what our clients can be doing to become more efficient.
No, and to your point, Fred, digital transformation just goes beyond the end user experience today. It actually transcends into the processes in the back office too. So a couple of things that we think of when banks and credit unions are becoming more hyper efficient is, how do I look at my processes today? How do I kind of blow that up so it creates a great, as Brogan also said, differentiated end user experience on the front end, but also differentiates us on the back end. So for example, kind of walking through your BA stat, a lot of our customers that we walk into have manual processes in place from, this is the way we've always done it. Hyper efficient institutions today are taking a look at those processes and saying, how can I blow this up? How can I take that manual intervention, make it straight through processing while keeping the same risk and guard up in place, but utilizing the systems effectively? So that's where we can say it goes just beyond that end user experience. It's delivering the whole entire experience through user all the way into the institution. The other place, kind of an example we've been working with, about a $4.5 billion bank most recently, was a wire situation where end users would input the wire into the system, basically send it off to the back office. They would manually download it. They would input it into their wire system. Once the wire information came back, they would manually input everything back in, send it back off, be done. So one of the things we're working with them on to become more efficient is, how can the end user from the business input straight through, files are picked up automatically, sent through the wire system that the bank or credit union utilizes, sending all of the Fed reference numbers back right to the member and end user, and you're done. So we're trying to look for those efficiencies. And I think that's where I kind of go back to hyper efficient institutions are looking for those capabilities to enhance and differentiate their end user experience and also their employee experience.
Seems like one of the things that we tend to think about when we think about efficiency is technology. And I think one of the things that you folks are bringing up that's interesting, and if you have some examples, I'd love to hear them, Brian and Chris, but it's a bit of that journey map in terms of the process and procedure as much as it is about the technology. So I think, Chris, the wire is a good example of that. Are there other examples of some of these efficiency metrics or tools that you're finding work really well? Chris, I don't know if you have another example, or Ryan, you have one, but.
Yeah, Tony, great call out there. So let's go back to your account opening. I've got a $4.5 billion bank and a $3 billion credit union. We have the same situation when it comes to deposit account opening. Their end users are actually applying today and the applications are going nowhere. It's a data capture form that get input by the back end at the end of the day. So one of the things that we're doing is trying to work with them from an efficiency standpoint of, you have the tools and capabilities today to automatically decision these applications that are coming through. So for example, to give you an idea, pulling up our stats from our performance vault, they're at sitting 8% of deposit accounts are automatically approved today. We're trying to work towards a stat of about 35% to get them there for their capability for automatic approval at some point within the next 3 years is what we're working with them. So utilizing the current tools that they have, relying on the technology, and then understanding the manual processes are kind of a piece of the past.
Ryan, do you have some examples there maybe on the journey or the process around efficiency and some of the things you're seeing in that space?
Yeah, well, a few different ones, and I promise we'll get to some I think smart uses of kind of, hey, these are our existing capabilities. But before I get there, I think it is only fair to talk about, hey, what are some really pragmatic applications of technology? So one anecdote: $2 billion credit union in the Midwest. AI is everywhere, right? But they took a very narrow and specifically defined approach to using AI for internal knowledge management, meaning applying natural language processing and machine learning to literally 900 different policies and procedures to deliver not only timely, but importantly accurate information to their contact center agents and to their front line. And I like that because it's very narrowly focused, but more importantly, right, it did lead to efficiency. So they've already seen their average handle time in their contact center decrease by 15%, right? So that's a direct correlation to that sort of per FTE efficiency. I think you have to think about both the expense and the revenue side. So one, on the revenue side, it's actually really not technology dependent at all. Is a $5 billion bank on the East Coast. Brad is also very familiar with them. A couple of years ago, they really set this vision of doubling down on specialization and focusing in on 3 verticals for deposit growth. And the results have been awesome. So they've seen double-digit growth in deposits over the last year or so. And just as a reminder, right, during that time, most of the industry was flat, if not slightly down. So I think it's that's one of those where it's really about business model differentiation and focus. And then the last one that I'll mention is a $4 billion credit union in the Midwest, and they took basically the existing capabilities on their core processing system, have some internal development resources, and they developed a relationship rewards program. And there's lots that goes into that, but one element that they really honed in on was card usage, and in particular, enrollment in the mobile wallet, right? So for new clients, for new members in their case, that was a big area of emphasis. They're now at north of 70% of their cards are being enrolled in digital or in mobile wallets. So that's like, I don't know, Tony, you would know better than I would, but it's probably triple, right? The median. Across the industry. And in turn, that's led to really top quartile, interchange income for their card base. So, I think that's another example of, it's not all about just going out and kind of, investing in the latest and greatest thing. It's using the resources you have.
Yeah, I think that's an important point too, Ryan, because when we talk about efficiency, right, we can't let the CFO dictate efficiency, because we all know that just translates to expense cuts. Efficiency is about both sides of the equation. And I think whether it's Chris's example on the account opening side or the wire, or Ryan, the wallet adoption. I was at a client this week talking about how long it takes to open an account in a branch. And why is that 3 or 4 times as long as it is in digital if you're not adding value with things like mobile wallets or online banking access, things like that. So I think hyper efficiency has to be considered in all areas of the bank or credit union for sure.
Yeah, great examples, and I love the diversity of examples. Maybe just quickly, Ryan first, and then Chris. what are the kind of services, for clients that are and prospects that are interested in, how Cornerstone can help improve efficiency? Just a couple thoughts on some of the services that we offer, if you don't mind, Ryan.
Starting with being laser focused on kind of strategic vision, building differentiated business models, right? That's where our strategy work with clients comes in, right? So, and that goes well beyond, the annual strategic planning process, albeit important. I think if you really drill down to the expense side of efficiency ratio, our Performance Vault and Performance Program bring great data and insights, right, to really make informed decisions, and also just brings transparency, right, to expense management. Certainly, CFOs are always keen to jump in there. I think another very important element, and I mentioned this on the expense side, is contract negotiations. I mean, the reality is, what's better than funding new investments and innovation with savings from contracts. And then the last one that I would mention on the revenue side, our team has really successfully partnered with clients to develop specific pragmatic growth strategies. Think about new products, right? New even whole business lines. I think we have a really great breadth in terms of not only the strategy element, but actually executing.
Yeah, and I think one good example that kind of ties in a lot, that we kind of built a program around, where Ryan and I worked with a client. More specifically, Ryan started with strategic planning that kind of laid the groundwork for what do we want to do over the next 3 to 5 years in terms of becoming more efficient. And one of the things that we saw was there was a need for digital banking. They currently had 38% adoption in their platform. And it was because of a lot of the inefficient tools in a legacy platform. So what we did was, once we moved out of strategic planning, we moved towards execution of looking for that new service through a system selection, through digital partners, which then moved into contract negotiations for best terms, and then led to the next level of effort for our implementation. And through that effort, looking for 60% adoption in the platform, and they're well on track over their journey of building that out. So nice example of tying, multiple versions of our services that we work together into a program that turned this, I think they're about $3 billion in assets. They've now become more hyper efficient through not only strategic planning, selection, contracts to fund this, and our implementation services. Brad.
Awesome. Tony, here are a couple of things, some common themes here. And I love the focus on strategy. Hyper efficiency really starts with strategy. I love the idea that hyper focused and hyper efficient may be, two sides of the same coin. Also, that this is a long-term play. It's not a one-time cost-cutting exercise just to cut heads, trash culture, trash customer service. This is a disciplined approach. You hear transparency, a lot of metrics. Our performance program obviously focus on that, but love the idea of strategy, focused areas, setting targets, having transparency, dashboards, monthly reporting, all that kind of stuff. And you hear woven into this is it's technology, obviously important, a huge enabler of efficiency, but it's also culture, a culture of continuous improvement, a culture of wanting to be better, wanting to learn, and a culture that empowers people to make decisions. Also heard some great ideas on revenue. Sounds like, some of the opportunities today is in niches, vertical niches, product, new lines of business. Also payments, and we'll talk about that in some of our other sessions. I think a lot of our clients are leaving non-interest income opportunities on the floor by not maximizing payment, retail, commercial, both. And then, we can't avoid the digital piece, because digital can help, you said, both on the revenue side and on the expense side. So as great as that Bank of America number is, for digital sales, and we'd love to strive towards it, and we need to be moving that direction. But also it's, how do we use digital to automate the back office, transform processes, become more efficient, but also improve our member and customer experience as well.
Yeah, no, I think that's really, what I've heard from you folks, if I can use one of my old boss's favorite phrases, is that which gets measured gets attended to, right? So if we think about it almost as a matrix of, It's revenue and expense in order to be efficient, which is how do I get the most revenue and the least expense? And then it's technology and process, both, right? And if you think about those 4 dimensions, it very much seems like that's the best way to get that hyper efficiency is you've got to manage all 4 of those components together to deliver on that hyper efficient expectation that's become required, I think, in today's banking environment for sure. All right, folks, if you need help or want to talk about hyper efficiency and identify opportunities within your organization, definitely reach out to us. Brad and Ryan and Chris are ready, and we'd love to talk to you about some of the things we can do to help you all become hyper efficient.